Hello traders, and welcome to another weekly market forecast video. Hopefully everybody has been having a great weekend so far, and hopefully most of you have been listening to us in the last couple of weeks that we have been explaining the market, and as you have seen, things have moved out again as expected overall. If you are new here, don't forget to subscribe and leave us a like on our videos so you can help us out in our attempt to grow and help as many traders and investors around the world. We would appreciate that. And don't forget also to check our social links down in the description, including our premium member service that we run. In which you get analysis in much greater detail that we do over here, plus our best trade recommendations, provided that we always consider which one will provide us with a much better value as a trade in general. Now, we have spoke about the dollar index for a while now. We have been explaining that it was setting up for a sell-off, including the stage over here and these highs over here. And we have seen how also now fundamentals are like a domino effect. The market will always tell you ahead of time what is coming next, and this is our skill at ROI Forecast. Specifically, we can tell ahead of time when a major move is about to happen. It's not easy, not everybody can do it, and that's why we have the service, and we are also running to our 4th month of the service, and we are doing pretty amazing when it comes to our trade recommendations. We will share with you shortly within the next few weeks our performance. We have shared that already a few weeks ago, and things are moving as we expected overall. So for the dollar index, we can still see more downside within the cycle from 26th of June. For us is not complete. We can see more downside, but overall we are not expecting anything significant in terms of bounce in the dollar index for the time being. And overall, more downside can take place. We can get a bigger consolidation here and then fall again. This is something that might happen. And overall bias is to the downside for the dollar index still. For the dollar yen, we have been explaining from this area over here that we are going to see another move to the upside for new highs, and then we were expecting sometime the market to give us a reaction to the downside, and this is exactly what we got again. Overall, we can still see that this move to the downside should extend, so we might get some consolidation and then another move to the downside. And perhaps this has a likely chance of a bigger cycle getting started. If you want to know what we can see ahead in the longer picture, feel free. Like I said before, you are missing a lot of content and things we don't share publicly. The link is in the description through BMC page, our membership. If you have any questions, send us an email at support@roiforecast.com and we will get back to you within the day. So for the dollar yen, we are biased to the downside right now, and we can see a new cycle starting to the downside. But overall, as I said before, the yen pairs in general will become very interesting very soon. We have been also warning our members from a few weeks ago about them, and we will see how we might be able to trade them step by step, but of course this is only for the members area. But in general, dollar yen, as I said before, we are expecting more downside for the time being. For the euro dollar, as with the dollar index, another great market move that we have been expecting for a few weeks ago. We have been saying even from these lows the market is accumulating for a push to the upside to break the highs of 4th of June, which is very soon to do that. We might experience a small pullback. It's not going to be anything drastic, but we still see another high. We have a target area up here that we have generated a long time ago, and our members knew way before, even from 16th of April, about this setup for this target over here. So this was one move, this was a pullback, and this was another chance to buy for those who like to trade euro dollar. So one move from here to here, this is almost 300 pips, and then one move from these lows to these highs is about 400 pips, and we have seen this ahead of time months before. For the pound dollar, we have been explaining also about this one since April. We shared this to our members. This was a great buying opportunity over here. This was a pullback and another chance to buy this move. And then the market was doing an expanded flat corrective structure over here. And then as the euro dollar as well, over here accumulated, buyers entered again, the market pushed up with more than 300 pips over here as well. We can still see more upside in the pound dollar. We have a target to the upside. If you want to know the target and what can take place next, again, you can consider becoming a member. The link is in the description. Other than that, short term, we are expecting a small, possibly a small pullback, nothing drastic. So the market can still play like this to the upside over here before we might do a small pullback and then more upside later on. So overall, we are biased to the upside for the pound. We should not be looking to sell at this stage. For the pound yen, as we have been saying from these levels over here, it's not good chasing the market higher. We were expecting to see some reaction like the dollar yen. We have got the reaction. We can still see more downside for the time being in the pound yen as well. And as I said before, this one can also still make another high, right, before we get a bigger reaction to the downside. But we are not interested in chasing the market higher, and we will need to see more data to see what the market wants to do next. But we can overall see that soon this one should be providing us with a bigger correction to the downside, but is not confirming that as of yet. As I said before, another high it is possible, but it's not a good idea chasing this market higher. For now, it's not recommended for traders to trade it because it's not clear. For the EURUSD, we have been explaining every week about this downtrend over here. We have explained over here that we might get a sideways market for some time, and this is what we have at the moment. We cannot deny the possibility of a little bit more upside to finish this correction before we move to the downside again. So in any case, we are not interested in selling this pair. We would only be looking for possible selling if we get the right bounce and entry. If you don't know what is a right bounce and entries, and if you don't know how you defined market entries and stuff like that, once again, if you want to become a proper and efficient trader, you should join us with the link in the description so we can teach you the right way of trading and when to avoid being in the market in general. So as a summary, EURUSD, we can still extend this correction, and then soon we will find more sellers for the next move to the downside, but we are not there yet as of now. Now for gold, we have been explaining for a long time that this was a great buying area for gold. We have seen a reaction to the upside and then a bigger pullback to the downside. The market has accumulated over here in these lows, contrary to what most people believe that gold is going to trade to the downside, which we have been explaining. This shouldn't be the case, and the bigger move will be again to the upside. We got the first reaction to the upside over here. Now we might get a little bit more pullback. It doesn't have to be a big one. We should still trade to the upside and make new all-time highs. So our bias for gold, as we said earlier and months before, is to the upside. We have still not reached the minimum target area. If you want to know which is that, again, you should consider checking us out with the link in the description. Become a premium member and benefit from daily live sessions Monday to Thursday, and also a weekend market overview video, which is 30 to 40 minutes long, which is accessible only for members. And you can also follow us with any of the social links down below, especially our Telegram channel, which we publish also notifications, if you are a member, when we post and share something like our live session registration links, our recordings, our trade recommendations, and so on and so forth. So for gold, we are still biased to the upside for new all-time highs for the time being. For oil, we have been expecting this move to the downside over here, as you know. Then the market did a bigger bounce to the upside and reached almost over here. As you can see, another Fibonacci extension area. If you know how we project these areas, you should become a member, because this is the only place that we share our proper analysis in detail, and we explain what these areas represent and when we can use them and when they become unreliable, because it's very important to understand when to use something and when not to, because nothing is to be taken blindly without understanding in deeply the market. Now, most probably from this area, we have explained also to the members that at least the reaction to the downside should take place around these levels down here. Our bigger cycle bias for oil is to the downside still. We should be heading to break the lows from 4th of June soon, but we cannot deny in the short term a double correction from this cycle, so perhaps something like this for another push to the upside before we drop later. It is still possible, but the reaction from this area will determine that if we are going to see another move to the upside or not. But regardless, the bigger move of the market should still resolve to the downside sooner or later. But for now, this is where we are, and the market needs to give us more data and information to determine with more higher probability chances the next move. Quick update here for Bitcoin. We haven't shared it for some time because we didn't have a reason why to do that. We have explained that the market was in a corrective phase since the highs of 14th of March up here, and we have been trading sideways to lower since then. We have reached a very important area, another Fibonacci extension area down here. And from here, ideally, we're expecting the cycle to resume to the upside. We have a target to the upside. Again, if you want to know that, feel free to become a member so you know what we see ahead of time. Like we have done numerous forecasts, we are planning to do a video sometime in the midweek and show some of our member-only content and how this played out until today over the last 4 months. So for Bitcoin over here, we are looking a break on this trend line, as you can see over here, and ideally we need this price action to keep trading to the upside and creates enough separation before we hit new all-time highs. And this will be a process. It's not going to happen in one day, and things will get interesting for the third and fourth quarter of 2024. That's something that we can tell you. If you want to know more, of course, you can feel free to become one of our premium members and benefit from all that and get the best analysis that you can get, I would say, at this point, because believe it or not, as you know, we have started this service because we have the skills and experience. And one thing we can tell you is that be aware of the type of content you are watching, because 90% of the industry is, I would say it very politely, has not the right knowledge to provide market analysis, and that's as far as we can see at this point. So for this one, we are expecting an accumulation stage for a new cycle to the upside to new all-time highs. For the SPX, as we said, we expected the market to remain bullish. We have reached our minimum target area, which we have generated long time ago. As I said before, we don't share this for free on YouTube. This is only provided to the members, which you can also become part of it. And now we are sharing it over here because we are right now in our target area, the minimum target area. So what we can see now for the SPX, it's still maybe a small pullback, but we should still make another move to the upside. This is what the market is telling us at the moment. Of course, at some moment we might see some pullbacks. They don't need to be big. They can be simply small, and we can simply keep trading to the upside for some more time. This is not out of the ordinary. We have seen such market conditions many years in history, and this is another one of them. So do not look for any counter trades in this market. The people that do that, they usually lose their accounts and their money because you do not want to counter trend a strong bullish market by any means. If we have the chance for a proper pullback, then this will be another chance to buy the trend, at least for the time being. For the bigger picture and what we see in other indices and how we have a clear vision for the next couple of weeks and months, again, to understand it, you should become one of our premium members and we can help you out see the market ahead of time. Of course, with the highest probability in any market we see. And of course, when something is not clear, we are straight and we say that this is not clear, and thus we do not like to pick any random forecasts or recommend any trades when something is not clear. Now, like I said, for the SPX, more upside can take place. The cycle is not complete, so do not attempt to counter trade the market. If we see a possible dip in the market, it will be another chance to buy. So for the time being, this is what we see in general. And concluding our session with the 3Qs and GDX from our US ETFs. The 3Qs, as you have seen, they have made new all-time highs again. We have got a small pullback. We can still see another high, another pullback, and then another high, similar to the SPX, like I said before. And we are still trading within the cycle from 19th of April overall. And more upside can be seen before we get any other pullback sometime in the near future. For now, this is the view, and we are not interested to sell. Other than that, if you get the chance for a pullback, it's going to be a buying opportunity. And with the GDX, the gold miners ETF, we have made new highs above the levels of 20th of May. The cycle is 17th of June over here, which we have been saying this was a buying area. So we can expect a very small pullback for another push to the upside to reach the 40 area. We have higher target to the upside in general. This market can get very strong as well, similar to the indices. So this will remain to be seen, but we can overall see more upside in this market. So for buyers, the buying area was this one here. And if you didn't buy from here, you shouldn't enter the market randomly. And this is also something we teach to our members. When we recommend something to buy or sell, it really needs to be in a specific area, which we call extreme. Otherwise, you are gambling in the market and you don't have chances of success. You only need to be trading the areas that provide to you with the highest probabilities to get a decent reaction in the market and not guessing in between the cycles, which, as you know, the lower time frames, they can give you a lot of variations, and this creates a lot of instability and unreliable forecasting in terms of the 1 hour and less time frame. And this is how you need to approach the market, otherwise you are gambling in general. So for GDX, more upside, as I said, minimum the 40 area should be seen soon. And that is our weekend's market forecast video. Once again, thank you for watching. Don't forget to leave us a like and follow us through our social pages in the description. The more likes and shares you provide to us, the more we can grow, and we can push our content and analysis to more traders to help any retail trader as well, because we know for a fact that most traders, they lose money, and our main mission is to help them as much as we can. Of course, this will depend on the person. We cannot force anyone to join us. This will again depends if somebody really wants to learn. We are here to do that for you. With that note, guys, enjoy the rest of your weekend, and we will see you probably on Wednesday this time with a midweek's video that we are planning to share, either for an individual instrument analysis, or we can also share befores and afters now that we have a lot of forecasts completed, so you can see the power of ROI forecast, that we see the market ahead of time. And most importantly, we do not provide analysis just because it's our opinion. We have valid data and reasoning, and we explain to you exactly why we see the market heading to each direction. So take care, and we'll see you in the next video.